The Association of Issuing Houses of Nigeria today hosted its first biannual business lunch in Lagos, focusing on the theme, the Nigerian Capital Market Agenda for the next 4 years. It brought together stakeholders from the capital market ecosystem and policymakers in the country. In his opening remarks, the president of the Association of Issuing Houses of Nigeria, Mr. Chuka Iseka, gave further insight on the objective of the forum.
AIHN, through this business lunch interactions, brings together key policymakers and market practitioners to dialogue on relevant issues that impact on the workings of the capital markets and the overall Nigerian economy. For the industry to grow, however, and fulfill the promise of the master plan, we believe government policies and support are needed to drive activities that will encourage private sector participation in various forms that will end up forcing effective fundraising from the capital market. Consequently, it is AIHN's expectation that the capital market agenda for the next 4 years will be hinged on 4 key pillars. 1. Policy reforms that promote market economics. As we all know, the capital markets rely on market-based ideologies as indispensable tools driving economic growth. 2. Liberalization of the oil and gas sector via appropriate policy, regulatory, and operational reviews. 3. Power sector optimization, focusing on the bankability of the power sector value chain by addressing existing governance, legal, regulatory, funding, and pricing issues. And 4. Private sector-led infrastructure development, leveraging on various PPP platforms and guarantee arrangements.
The Acting Director General of the Securities and Exchange Commission of Nigeria, Ms. Mary Uduk, also outlined ways it is providing a regulatory framework to deepen the market.
Trade groups such as AIHN will play increasing roles as SROs in the regulating of the activities of their members, especially on the implementation of the complaint management framework. Capital market operators will have to register with their respective trade groups for proper recognition going forward.
The AIHN 2019 biannual business launch also featured a panel session that discussed the capital market playing a central role in driving Nigeria's economy.
The biggest export that we have is people. We have remittances last year officially of $25 billion, which is bigger than the oil inflows to the federal government. Unofficial remittances are estimated by the AFDB at half of that, so maybe we have 37 trillion. So I don't understand why anyone would stand up and say our 90% of our exports are oil. Actually, 70% of our exports are people. And thank God for the fantastic diaspora that Nigeria has. Thanks.
Revenue has to be a focus according to the priority of government. The fiscal numbers are not anywhere near where they should be. With the various measures that have been introduced, clearly, as you did say in your opening remarks, revenues have grown, but they're short of the projections in the budget, which means we are not able to fully implement the budget. But it also means that to achieve the growth that we're looking at, those revenues must more than triple, and the earlier, the better.
They have been crying for what they call cost-reflective tariff. If we look at the cost structure, we find out that these people are operating almost at a loss. And for some political and maybe social reasons, governments will not allow them to come up with what we call cost-reflective tariff.
How do you think the AIHN can be the catalyzing platform for this and kind of pull and help government pull all of these pieces together? Because like you already explained, there's just absolutely no reason why a country like Nigeria shouldn't be seeing billions of dollars coming monthly in terms of foreign direct investment.
I think this touches on AIHN's 4-point agenda, which I mentioned earlier, and starting with policy reforms and promoting market economics. Continuing with oil and gas sector liberalization, power sector optimization, and private sector-led infrastructure development. Now, within each of these areas, there's a critical need to get the right enabling message that we receive, if you listen to what people have been saying, for example, last week at the SEC budget seminar, the takeaway from that session was that the capital market must stop begging and put itself in the driving seat. Now, you imagine just said now, the capital market has to tell government what it needs to do. In the session I had last week with the DG of DMO, that was the same. So clearly, this is the time for the capital market to invest intellectual capital in coming up with structures, policies, framework that will tackle all these challenges in key national priority sectors. And whilst many sectors are important, these sectors are very, very key for the economy to take off. Power, telecoms, infrastructure. We fix that, bam, we have an enabling framework. But how do we go about doing that? Now, whilst I agree, it's clear to all of us that the private sector needs to be in the driving seat, we have one big ask from government, and that is urgency. Urgency on the part of government. Now, Nigerians have voted for continuity, but what kind of continuity are we going to see next level? We need continuity on steroids. We need continuity on steroids. That means everything government does, there has to be an urgency about it. If the economy doesn't grow 6% plus for the next 20 years, we will never develop our economic part. We'll always be chasing shadows. And by chasing shadows, I mean, our price may be good today, it gets bad 5 years' time, you're going to recession, you'll be going in stocks and stop. So there must be a high level of urgency from government for the market to try. And what do I mean by that? Government has to be decisive and close out on key policy issues affecting the functioning of the economy for the private sector to take it off from there. I mean, whichever sector you look at it, it's been explained that there are unfinished businesses. Is it the downstream sector where we're wasting much needed funds that can go into infrastructure? Is it the upstream sector where there are still outstanding legal, regulatory, and fiscal decisions to be taken and we challenge investment into the, I mean, the ERGP mentioned 7 key big wins for the oil and gas sector. What's the scorecard today? 2019, we're meant to be reporting, we're meant to ensure that 60% of our refinery oil comes domestic. Where are we today? So government has all the policies. Government has all the, there's nothing we say here, there's not one formula already within government. Now is the time to start doing this. For us, as the private sector, we have to start putting things together. For one, some of the ideas that we mentioned here as what we're looking at. Now, when we have challenges, we throw money on it, and we throw money on it through the public sector. We have various private, we have various intervention funds. Now, each of those funds, if they start on the platform of the private sector, it does a lot of it. Because when you build capacity, you create instruments that can be traded, and you find out that those funds, because you subject it to market discipline, will not be wasted. Whether I would like it or not, the average corporate sees it as a source for indirect subsidy that is not fully transparent and regulated. So that's one area I wait for each of those sectoral funds. The market needs to come together to put in place a structure and sell to government. Government has to do it. When the banking sector was in crisis, what happened? Government rallied around, private sector rallied around, they set up the AIHN contract. It made a big difference. It solved the problem and it created an aftermath of security. So it follows as, for example, the Minister of Works and Power mentioned something about the infrastructure fund. We need to see infrastructure as a national emergency and allow the capital market to come up with struggles that we know we can sell. Issues relating to funding of the joint venture. Ultimately, when you have periods of challenging oil revenues, government will have challenges in funding this obligation because at the end of the day, out of government funding is obligation on joint venture through the sale of oil and through dedicated funds. It's a 5-line chart, it goes every month. And if it doesn't, if revenues are low, government will be able to meet its part. The operators will end up going to go and borrow at very inefficient rates. So that there's a lot of work to be done. And it is a result of the market to come up with those initiatives and go sell to government. All we need is for government to create the enabling and get out of the way so that we can thrive. Thank you.
Mr. Chuka Iseka speaks further on the AIHN event and the prospects for developing a vibrant capital market and economy.
Okay, the essence for hosting this was to bring together key stakeholders so that we can have a dialogue and focus on what we need to do as a capital market over the next 4 years for the market to play a central role in stimulating growth. So that was the essence of this session.
You really had a very electrifying discourse with stakeholders from the public and private sector. From what you've heard today, what are the key takeaways from the discourse?
Okay, the key takeaway from the discourses are like the private sector and the capital markets have to be in the driving seat. We have to stop begging and waiting for government to make things happen. We have to be telling government this is what they have to do to ensure that all the challenges that we have in the various key priority sectors are resolved. However, we only require one thing from government, and that's for urgency. The government has to show the required level of urgency in doing those identified things that will put in place the right environment for the private sector to thrive. So that was what came out from this session.
A major takeaway from the first biannual business launch of the AIHN is the 4-point agenda set for the federal government, covering policy reforms, liberalization of the oil and gas sector, energy reforms, and a private sector-led infrastructure development plan. If these 4 areas are addressed urgently, Nigeria should begin to experience rapid economic growth.